Hi, my name is Gary Pinkerton, and I wanted to take just a moment to let you understand what it's like to do a first meeting with me as at Paradigm Life as a wealth strategist. And so maybe this is 30 to 45 minutes. It's a kind of a typical number one meeting. I'll actually go through it. I'll spend a couple minutes just showing you big picture what things are like. So let me share a screen for you, and you'll get a feel for what it's like to, again, go through this and to experience this new concept probably as one of our clients. So first thing to keep in mind is that this thing has a lot of different names. You'll hear it talked about as a family bank. You'll hear at Paradigm Life in some of our materials in our very well-received book that I'll talk to you about in a second. It's talked about as a wealth maximization account. Maybe its most common phrase is infinite banking, but it's you and your family replicating what the wealthy out there have done for centuries in this world, and in America for at least 2 centuries. We have understood how to collect and grow money in a way in which it's protected from those who want to take it from you and from taxes, and allows you to generationally hold on to and control money. Is this only for the wealthy? Absolutely not. I have clients ecstatic about being able to do this at $500 a month. I have people doing it at $500,000 a year. It's really just what fits for you and your family. And so that's the goal, to help you understand that approach. So a little bit about me and where I came from and what I'm doing today. So I run a podcast called Gary's Gulch. Those of you who are familiar with Ayn Rand and her book Atlas Shrugged, she devoted her life in the 60s, 70s, and 80s here in America, after emigrating from communist Russia, to help us understand why we should not go down that path. It is a book about how to be a producer. It is a book about how to grow agency in your own life. And that's what my podcast is about, helping individuals get themselves into a financial position and a position of financial education where they understand and have the ability to control their own future, make their own decisions, and live a life of freedom, which, after all, is the American dream. I have a ton of resources that I provide, both at our site there at Paradigm Life. If you're familiar with a real estate investing group called Think Realty, they have a resident expert program, which you can join for free and get a membership to, and you can find out a lot of information and a large masterclass that I do there and continue to contribute to. So who am I? Well, I'm 54 years old at the time of this recording, and I was born in 1969, so late 70s, early 80s. I grew up in times that really rhyme with today, specifically high interest rates, high inflation, and we had gas lines, we had the OPEC oil crisis, and people's expenses were outpacing their income, which is really what we refer to today as stagflation. And it just really wasn't much fun. I spent a lot of time working on our 700-acre dairy farm. And in the end, we had 21% interest rate loans on this farm, and we ended up losing the farm to the bank, essentially. I mean, we did sell it at the last moment and got enough money to pay off the loans and walked away with basically the shirts on our back. Father's health was failing at the time. My mother was getting her career up and running. And I was a kid in high school trying to do businesses in this little machine shop on rented land from my uncle at this point, so that we could put food on the table. It's just not the place I wanted to be. And so I left as soon as I could to go get an education and do that safe, secure job thing that I was told as a young guy was the right approach. And it did work out great. And I'm very grateful for those 30 years of my life, my first kind of career path. And so I went from farmer to becoming a nuclear submarine officer in the Navy after graduating from the Naval Academy. And I spent a lot of time on 4 different submarines. That I commanded in U.S. Tucson, and that was important times in American history. I processed in 2008, entering with a really good kind of net worth and in a good position where I was considering retiring after that and spending some time with my young sons to do what, in fact, my dad had done for me, which was spend a ton of time teaching me what was important in life, teaching me work ethic and how to grow up to be a good contributor. When I left command at the end of the Great Recession, having paid no attention personally to my finances because I was busy on this thing out in the Pacific Ocean on deployment, I realized I had half the money that I had when I started. And that really, really frustrated me. As a kind of military-born control freak, every time something would go wrong on my submarine, and often it did, I would, we would get alarms, we would have procedures. I'd have a ton of people helping me figure out how do we put this thing back together and how do we keep going on with our mission. That didn't happen once during those years with my financial life. And so I had all these advisors, and none of them called, emailed, texted, or did anything to tell me that things aren't going well. You're losing your family's wealth. And in fact, when I questioned them afterwards, after leaving command down here, they said things like, hey, it was the recession. We all lost money. It was just normal. And they said, you're in it for the long haul. Don't worry about it. Just continue, pushing your money our way. And none of that stuff worked for me. Now, as I said, kind of a self-proclaimed control freak, and realizing that if we have control over the things that are important in our lives, we have a much better ability to, control the destiny, right? And so I went looking for how have the wealthy been able to hold on to it for generations? And what's important about that we need to learn about our money that we don't learn in school. And I learned a lot of things I didn't know about before, about taxes, about asset protection and risk, and the different kinds of investments to put my money into. And I talk about that typically in a first meeting. What I wanted you to learn, though, from my personal experience was not so much about me, but it was about two big lessons that I personally learned. To protect yourself long-term from the insidious effects of high interest rates and inflation, you have to have long-term fixed rate loans on property, and you need to hold hard assets. You need to own hard assets. Owning hard assets will allow you to kind of tread water against high inflation because the price of your assets go up. But having long-term fixed rate, low interest debt on those assets is what actually allows you to get ahead, which is why I'm a big fan of directly owning rental properties. And I have a great friend, Aaron Chapman, who is my strategist in that world, and he helps me build out my real estate business and keep it moving forward. The other lesson was you've got to have control over the things that are important in your life if you truly are going to move forward and protect yourself from moving backwards. And so one of the other things I found was this concept of high cash value overfunded life insurance and why you would ever use that. First of all, I had no clue why you'd even have cash inside life insurance to begin with, because all I really knew about was term insurance. And along that path and trying to figure that out, I met a guy named Patrick Donahoe, who is CEO of Paradigm Life. And as you can see, I work with Paradigm Life now. I became a client in 2011. And in 2014, I had decided that this was the thing that inspired me the most. And it really helped me redefine what patriotism meant to me, what service meant to me. I realized that we have some pretty amazing weapons and ships and people who are out there standing guard and standing watch for America. And I love the fact that every day I still hear people say, thank you for your service. And so we're in a great nation, people who respect what others are out there doing to defend our freedom from outside aggressors. But what it became obvious to me after a few years of working in the DC area and just working in commercial life or in private life, I have realized very quickly that the real threat to American freedoms come from within. It comes from us forgetting what our founding fathers put in place about freedom of speech and of property. And so life, liberty, and property really matters. And property is one of the big ones. And so I want to help my clients understand how to gain agency in their life and hold on to that property. And Patrick Donahoe really, really helped me understand those concepts and the one about that high cash value policy or your own personal banking system. And chapter 7 of his book specifically, and I would be happy to get you a copy of this. Chapter 7 of his book talks about a concept, hierarchy of wealth, which really we adapted from Abraham Maslow and his hierarchy of needs. He was talking about this Egyptian pyramid as an analogy of something that has stood the test of time for thousands of years there and both there and in Mexico from the Mayans. And the reason that they have done so is because they didn't skip any steps. They built out the bottom layers, the foundational pieces, and then they went to the next layer. They didn't just get lazy and go up to the top or get impatient, right? And many of us do that with our finances. But in his world, he was talking about food, shelter, and clothing before you figure out self-actualization up at the top. And so we use the same analogy. After tens of thousands of hours with thousands of clients at this point at Paradigm Life, what we know to be true and what continues to repeat itself in clients' lives, and it was certainly true for me, is that if you have a lot of control and insight over your personal money, who's got it, what they're doing with it, when they're going to give it back, and is it going to bring a return, then you're very low risk. And therefore, you're very high control and you're very low risk, right? As a result. So every time you give up control, you bring on risk, and you need to mitigate that risk and understand that you're bringing it on. And so to put some pictures to it and make it a little bit more obvious, the top three tiers are investments, and the bottom one is savings and protection. And so I have nicknamed these direct investments, indirect, and speculative. And again, it's about your level of control, not an indication or a comment about the asset itself. So for some examples of things that are in your direct control, your own education, your own experiences, expertise, and how marketable you are out there and what your salary could be, right? Businesses that you create based on the work you've put in yourself. And then, your own directly owned assets. And so these are things that you are kind of the person driving the car, seeing all of it hit you in the windshield, man. If you make a mistake, you hit a speed bump or a pothole, and you realize, I need to be on a different road, or I need to take some action, right? And so that's why these things have historically been the things where you're at very low risk of success because you're at high control and you have the insight, you see everything through the front windshield. And as you want to step back into the backseat on what your money is doing, sometimes I say send it off to summer camp. Sometimes you want to just focus on your business, or maybe you want to do a trip around the world, or you want to devote 2 or 3 years towards a charity. That is hard to do if you have to be in direct control of it. So sometimes you want to be a more backseat kind of indirect approach, more passive, right? And you've heard these called syndication, limited partner involvement, things like that. And I'm in probably 30 of these at this point. I've got 10 years experience doing this. And it was for me primarily because I wanted, as a business model, I wanted to understand how to help my clients do this safely. But also I want to focus on my own business. And so I need to send my money off because I can't have 100 rental properties. I won't be able to spend any time on my passion and my business. And so you bring on risk here, though, and that is the person who is now managing your money, right? Like they may make the wrong decisions. They may not tell you about it. And so you have a little bit less insight and certainly less control. And then there's the part where you have no clue what your money is doing. All right. So I throw the markets up here. And again, I'm not bashing the markets. What I'm doing is telling my story and saying, listen, when I, for 25 years, was busy with my own career in the Navy, I didn't pay attention to what my advisor and the 401k manager was doing with my money. And they put it into, the 401k guy gave it to a money manager, and he put it into some mutual funds or stocks. And that went to companies that I didn't even know that my money was involved with. And then those guys went and had board meetings, and they had product delivery meetings, and they made decisions that I had no clue about, right? And there was no way really for me to have a clue about it. And so my insight and control was very low, and therefore my risk was maximized. So I'm not saying that the markets are at the top here for everybody. Certainly Warren Buffett interacts as an investor, and really he's a business owner. He buys the businesses, but he goes and spends time on the board and he reads the documents. Like, I just wasn't doing that. And if you find yourself in the same place, like, don't kid yourself that your market advisor tells you that you're in the large cap blue chip stocks and therefore low risk. Yeah, you're on the lower side of the bricks up here, but your level of management, your level of relationship with your money, because you're not personally going to the board meetings, right? You don't know the people in charge of the company. That means that you're still up here in this arena because your insight and control is low. But underlying all of this is really my day job, and that is helping individuals understand that there's another tier down here, and it's super important. This is a savings tier, savings and protection tier. This is the foundational piece where your money is 100% safe, liquid, and guaranteed, so that this foundation, like the foundation of a house, will hold everything else upright. And a little bit of a shocker, like, we recommend that you're doing 35 to 40% of your money liquid in a place where it's guaranteed to always be there. This foundation is actually important. And you might say, well, the foundation is not that useful in my house. I can't use it as a room to go hang out in, right? Well, that's true. But it's important because that room that you want to hang out in is not going to be there. Like, all of your investments will not be there. That retirement you're looking at won't be there if you don't have adequate savings and, by the way, protection. And so this vehicle is whole life insurance. It's overfunded to focus on it like a bank and get access to the capital in the first few weeks. But it is also protection of that number one asset in your family's life. And listen, I hope you agree with me that you are the number one asset. Elon Musk made millions of dollars. Warren Buffett did Steve Jobs did. There's many people in this great American dream that have made millions from an idea in their head, right? I can't create a real estate project that's going to do that unless I'm building a cool resort like I'm doing here in Cape Coral, Florida. I can't recreate that with buying investments like you can investing in this thing. So in the end, we call it wealth maximization account. We call it family bank. It's got a lot of names. It is just your own personal banking system that is performed at a high cash value whole life insurance policy where your money can do two jobs at once. Your money is in here growing without paying tax on any of the growth during your lifetime and passing it on without paying taxes. And then you access that capital to go do a second job where it is providing cash flow for you. And then you just continue to cycle your money through this, growing twice, not just once. And so if your money was sitting in a checking account and you put it into your business or bought some real estate with it, then it's no longer down here growing, right? Even though you may have a high yield savings account at 4% today, it's no longer doing that if you put it in the investment. And that's the penalty that you pay, the high penalty, the opportunity cost that you pay for using cash instead of setting up your life in this manner. Okay, so what I'd like to do now is take you to an example of how I use, how I interact with my clients. So the first thing I'll do in the notes afterwards is I'll send you a link, right? And this will be in any of my signature documents. It'll provide you a copy of Heads I Win, Tails You Lose, both the ebook and the audio versions, right? And from there, my notes will also capture all the stuff we just talked about, family bank, et cetera, right? And then I'm going to go into kind of teaching mode, right? So depending on how much experience you come from with this and how many questions you have, we may meet for 2, 3, 4, 5 meetings before you actually ever even start anything. And it's because I want to make sure that you're comfortable with the mechanics of how this actually works. I'm a nuclear engineer and a math guy, right? So I'm not going to intentionally beat you with all of the data. I'm going to give you the level that is necessary for me to be a good fiduciary, responsible person, and to the level that's important to you. I have many individuals in the software engineering space, and they like to dig, roll up those shirt sleeves and dig in. I'm happy to go there with you, but it's not my intention to make this so complex that it doesn't make any sense to you. And so I go into kind of teaching and drawing mode. And I don't do it like this, but I did want to just kind of show you a sketch because I want you to get comfortable with when you ask a question. This came from a client question. I play it out, right? And they said, hey, what's the difference on these different kinds of life insurance? And so I explained that there's basically 3 kinds. The oldest is called whole life insurance. But the first thing I'll show is just term life insurance because it's the most familiar for most people. And this is only like 50 years old. And it's similar to like car insurance or health insurance. You're kind of renting the coverage, right? It's for a short period of time over your life. And you kind of cover it, you pay for it annually. And if you don't make a claim, and in this case with life insurance, we're hoping not to make any claims. But if you don't die, right, then the next year you need to rent that kind of coverage as well. And there's nothing to show for it each year. It's not really a wealth building or a cash building kind of vehicle. There's no cash inside your term insurance policy. And then you're basically just trading a fee for protection. Very similar to renting your house, right? Like you don't have any money in your bank account to show for all the payments you made. Renting, but renting's a whole lot better than sleeping outside. Similarly, I'm a huge fan when families have term insurance in place, protecting that number one asset when they're in a position where they can't afford to own the insurance, like owning your house, right? Like most of us in our gut know that when we get to a place where we can actually afford to pay the bigger payments to actually own our house through the mortgage and interest payments, we should do that, right? Same thing with life insurance. You should shift from this term to owning this coverage that will one day go to your family tax-free. You should do that as soon as you're in a financial position to do so. And then there's this thing that's kind of a hybrid of term insurance, and they call it permanent. It's universal life insurance. It's most commonly thought of as IUL or Index Universal Life today. It kind of changes its name every few years when it goes through class action lawsuits. And it's a bit of a stain on our industry. And it's because they try to take term insurance and make it act like whole life insurance, but it does it without any of the guarantees. And the reason it doesn't have guarantees is because you're able to mess with it. You can say, you know what, I'm not going to pay anything for a few years. And then I want to recover it. And hey, now I'm mad because why did the thing fall apart on me, right? So it just doesn't have that level of foundational guarantee that's necessary if we're truly going to use this thing to hold everything else important in our financial lives standing upright in that hierarchy of wealth. So this is just an example of how I draw stuff. And I explained that, listen, whole life insurance is kind of like owning your house, right? So you're making contributions larger than the term insurance versions over time, and they collect that money, and then they grow it on a guaranteed amount, and they even add company profits to it because we're at a mutual insurance company. And they give you access to that stuff called cash value, which is a combination of all that stuff. And you can use it for anything you want during your lifetime. But the amazing thing about whole life insurance is it does not skyrocket in old age like term insurance and universal does. It stays constant. And the reason it does is because they've been busy saving this money, getting prepared for the time when, if they didn't have a lot of cash value, that the cost would skyrocket because the likelihood that they have to pay out skyrockets as well. Okay, so again, there's a few different names: family bank, wealth maximization account, but it's just overfunded whole life insurance. And there's basically three things you have to do to get this thing right and to make it something that you're guaranteed will never break on you, and that you have some guaranteed tax benefits associated with it. So the taxes, again, that kind of gets into some of those deeper things. But let me just say that I will dig into the level of detail that you would like. There's a red line, kind of an upper MEC limit, if you've heard people talk about that came around in the 80s. And it essentially says, listen, we understand that you could use term insurance, you could use whole life insurance, there's other versions. And so there's different amounts that you can contribute to this policy and as far as cash. But they were leery in the 80s of people they were trying to limit people who were trying to stuff cash in here and get around the US tax code permanently for generations. You can still do that at scale. You just can't do it quite as easily as we could before the 80s. And it's the only time that Congress has ever gotten all the states on board to make what's probably an appropriate change to the life insurance taxation. And so basically, in this old school 200-year-old product that's just been keeping promises for people throughout American history, from companies like Mass Mutual, Penn Mutual, New York Life, that we all of which we work with, it's a bit of a rigid process. There's not a lot of access to cash in the early years, and that's some of the criticism that you hear about it. And it's because they don't understand that we're taking that product, locking in those guarantees and the tax benefits so that you can access the money without ever paying tax on it. And we turn it into a much less restrictive product on the right-hand side. We add a couple features to it. One of those features is called paid-up additions, or PUAs. I call it the cash part. And I explain that we essentially will take this asset and we're going to put a majority of the cash into this PUA portion. In fact, normally it's about 90% of the cash is going up here and a very small portion down to this part that has a limited access to it, right? And so you can decide when and how much you want to contribute to this portion. And so, this is an example of one where about 20% is going into the minimum and 100% going up here to the top. And so I used 100K as a max, but 10K would work as the max here. And it would be 2K as the minimum. So it's a very scalable thing. And so whatever we set up as the minimum really does need to go on for 5 to 7 years to keep the IRS law, keep locked in these tax benefits that we want. But you can see how we're putting a majority of capital up here, and that portion is liquid and flexible, and it turns this into a vehicle that in the first month you have access to 75, 80% of the capital and can use it for any purpose, right? And so what you have then, and you can see as I teach, I'm showing you different stages of teaching, I'm reiterating these concepts, doing them in color so that you can more quickly understand how this process goes and how the concept is working. And so you start with a base portion, and that money contributes into the cash, and you have this paid up addition part. And so over time, you have cash value that grows from day one, and you can access it in the first month. And you had death benefit or the life insurance amount. So there's really like two different tallies here. One common mistake that people have or misunderstanding because of the really confusing marketing out there is they think that they can contribute a little bit to the cash and then they get access to borrow against this entire death benefit. Well, somewhat jokingly, I point out, hey, listen, the only way they could use the death benefit as collateral is if they could collect on it, right? And we don't want, the mafia out there from the 1900s in Chicago, like going out and collecting on the collateral. We don't want them, killing you to get the death benefit. So you can only really borrow against the cash value that has grown inside your policy, just like you can only access, if it was sitting in a checking account instead, you can only access what's there inside your checking account or savings account. All right. But whatever is here, you can access in two methods. You can withdraw it and pay the opportunity cost like you would out of your checking account, or And this is where that money starts doing two things at once, right? You can borrow against it, take a loan against it, and your money sits here and continues to earn both guaranteed increases and dividends. And in the 2021, 2022 era, where you couldn't get interest on anything in savings and checking, you were still earning 4 to 5% here on whole life insurance policies and not paying tax on that. Accessing it for any purpose as often as you want, no restrictions, no cost of funding, etc. Right? Everything is rolled into this product and being very flexible and something that you're in control of. And so as it plays out throughout life, I showed a different example here. Let's say that we're somebody in our 30s or early 40s, and we decide, hey, we're going to want a policy that has about 800,000 of whole life insurance, basic death benefit that will climb to millions of dollars over their lifetime. And we want to contribute because our family savings is about $50,000 a year. We're happy to do like $10,000 a year minimum and $50 a year max. Again, completely scalable product. And so when you contribute this in, you should have access to roughly 40,000 of it right at the beginning. And maybe the first month or maybe the first week, depends on how badly it's needed, but you can certainly do it for any purpose in the first month. And again, you can withdraw, you can borrow against it, and just use it throughout your lifetime. And when you pass away, the death benefit has been rising, the cash has been rising, and they just pay off the outstanding loan, and they take the rest of the cash value and turn it into that larger tax-free death benefit and pass it to your family. So just reiterating, like there's a little bit that's limited access here at the beginning. And I mean, it's still in the background growing at the same rate. And by year 5 or 6, you've got access to more than you've contributed, and it is growing and compounding at a high rate. So, that's the big concept. And then I go and I create a unique design for you. And I go and show you specifically with your numbers, even further under the hood, showing you more, breaking it down and showing you more details, whatever is desired for you. Listen, if you're ready to go in one meeting, I just need to make sure it's a good fit for your family. I won't drag you through 3 or 4 meetings. And the way in which I find out if it's a good fit is I invite you to the Paradigm Life client portal, where you will find a ton of education resources. You'll have access to your direct concierge and my personal team throughout our time working together. Hopefully that's 50 years on my side. And however long it works out for you, right? This is a lifelong relationship that we're after here at Paradigm Life. And there's a menu here on the left-hand side, some other things that are available. As I mentioned, Paradigm Life is very much education focused. And so you'll see a masterclass that I've done on real estate. You'll see one on Patrick Donahoe's book, like a study guide for his book. There's some stuff on retirement and other resources. And this is a free resource for you as a client of mine at Paradigm Life. I just need to, get your email and cell phone, and I'll send you over access to all of this. And then another place on the thing is the forms section, where you fill out right in here, you would fill out a financial questionnaire before our second get together. And I would use that to make recommendations. And it does 2 really helpful other things. It funds, or it populates, this Wealth View 360, which I'm showing up here. And this is a really nice financial statement. It gives you great takeaways that you can take action on in your life. And you can go in and update the questionnaire or just update it directly here. And you see play out in your life how things have changed for you. In the future revisions of this, we have intentions that it will link in with your bank account and be active. Today, it's just something that you or my team, if you want to just send us your current statements, my team will fill out for you. But you can go in and update it, and you can kind of do self-service here and manage your own growth for your family throughout your lifetime. And so a balance sheet, an income statement, your net worth, legacy value, which supposed to bring this in. Mine's not accurate here at the moment, but it would bring in another $1 million. It shows kind of your cash savings ability. And so I can get a better feel for what size policy should I be looking at. And it brings some other things in here as well that are helpful for us as we go out through life. And then it does a second really cool thing. You'll see this button up here, Hierarchy of Wealth. And so this thing is actually taking your information, putting it on your family's hierarchy of wealth based on the way in which we see financial success in those different tiers and the amount of control you have, again, there in chapter 7 of Patrick Donahoe's book, Heads I Win, Tails You Lose. And there's a little masterclass down here about how to read this thing, how to figure it out. And then over here, there's a recommended allocation, which will show you, hey, how does it work? How do we recommend you allocate things in these different sections? And then we move on to second meetings, right? So I'll talk about, what you've put into your questionnaire, kind of my feedback on it, how your hierarchy of wealth is looking. And then we go through a bunch of other stuff. Again, this doesn't all have to happen, but it may be stuff that's interested or applicable to your life. Like I work with a lot of business owners, and sometimes they want to talk about Things like business succession, retirement, of course, is on everyone's mind, estate planning, asset protection, investment strategy. But in that second meeting, again, we're going to go over some of the initial stuff and see how much more would be of value to you. We're going to march through these kind of different phases of our relationship together. And then what does this strategy, going forward thing look like? Well, that could be something that we're meeting a few times a year. We're meeting once or twice a year. But in between, you're able to go in there to our Paradigm Life client portal and do a lot of self-service stuff to be able to really improve your own financial situation. So what else comes after, the second meeting? Well, eventually this is a life insurance, and there are some, parts of the steps that we have to go through to see if it's even viable. And one of those is you have to kind of do an online, or you have to do an application for the insurance company. And depending on what company we go with, and we work with like 20 of them, but one of my most commonly used today is Penn Mutual Life Insurance Corporation, been around since 1851. And they're pretty flexible with how much access you can get early on, and how you can interact with your policy online at a very convenient portal. And so I have personally migrated to that and Mass Mutual and New York Life for a lot of my clients. And so they have an online application process, and you just go through and you answer some questions. The other companies are similar. And you get this, button saying, hey, I'm finished, send this back to my advisor. I add the illustration that we've been talking about that is like a glove that fits your family's situation. And then we find out what the insurance company needs. They may need lab results, they may need doctor's records, but quite often for the healthy young business owners that I'm working with, or even people in their 70s, they come back and say, hey, listen, here's your rating. We've been able to validate based on the information you provided that we don't need to go do all that stuff that we used to have to do for every policy, for every individual, even just 5 years ago. So that's kind of, what the step 2 of the process is like. And then we stay engaged, and I would love to take any questions that you have. But I just wanted you to understand like who I am, what I'm about, what the process of Paradigm Life looks like, and where does this really nebulous infinite banking family bank thing fit in your family's situation. And so if any of this has resonated with you, please reach out to me. Let me know that there's a part of this at least that would be of help. And maybe it's even just the client portal for financial help, and you're not at that point where the family bank makes sense. Totally fine. I still want to help you and work with you and get your family on a path to agency. I hope this has been helpful and not too long. And again, my heart's in this. I can't wait to help you and your family reach your dreams. Thank you so much. Look forward to seeing you in person.